Hello and welcome to all the class 12 students out there. In this class, I am going to explain to you the second part of ratio analysis, that is the second important formula of the liquidity ratio, that is quick ratio. In my last class, I have explained to you the current ratio, its formula, and I have also shown you a sum. Uh, in this class, I am going to show you a simple illustration based on the formula of quick ratio. Quick ratio is another important ratio of the liquidity ratio category of this ratio analysis. So let's get into the sum. The formula of the quick ratio is, quick ratio can again be termed as acid test ratio or liquid ratio. This is the other name given to quick ratio. Quick ratio can be termed as acid test ratio or liquid ratio, and the formula is quite similar to current ratio. The formula of current ratio was current asset divided by current liabilities, and here the formula of quick ratio is current assets minus stock minus prepaid expenses. Current asset minus stock minus prepaid expenses divided by current liabilities minus bank overdraft. This is the formula of quick ratio. Applying this formula, we will solve the sums where they will ask you to find out what is the quick ratio of this sum. So, suppose a sum is given to you where different assets and liabilities are given to you. Assets and liabilities. The assets are given, suppose assets are given stock 4 lakh, sundry debtors is given 3 lakh, bills receivable given 1 lakh, cash given 1,60,000 and prepaid expense given is 40,000. Whereas on the other side, current liabilities or liabilities given to you are creditors, bills payable, bank overdraft, and outstanding expense. These are the items given to you through an illustration. 2 lakh, bills payable 1 lakh, bank overdraft 80,000 and outstanding expense 20,000. This is given to you. This illustration is given to you, and you are through this information you are required to find out the quick ratio. Or the acid test ratio or the liquid ratio, and the formula is this: current asset minus stock minus prepaid expense divided by current liabilities minus bank overdraft. Now, what are the current assets that you have to write one by one? The current asset given over here is stock plus, I am using short form, please use full form when you will do the sum. Stock plus debtor plus bills receivable plus cash plus prepaid expense minus stock minus prepaid expense. First you have to add up the current asset and then you have to deduct stock and prepaid expense from it. This will be the numerator, and denominator will be current liabilities, that is creditors plus bills payable plus bank overdraft plus outstanding expense minus bank overdraft. This is the formula. Now first you will write the formula clearly. After then you will put the amount one by one. Stock was given 4 lakh. Bills receivable debtors was given 3 lakh. Bills receivable was given 1 lakh. Cash 1,60,000. I don't have space, that's why I am writing over here. And prepaid expense were 40,000. Prepaid expenses were 40,000. All these were current asset minus stock. Stock again you have to deduct. Stock first you are adding and then you have to deduct. Stock is given 4 lakh and prepaid expense 40,000 minus 4 lakh minus 40,000. This will be in the numerator. Current assets minus stock minus prepaid expense, and in the denominator current liabilities, that are creditors, which is given 2 lakh plus bills payable 1 lakh plus bank overdraft 80,000 plus outstanding expense 20,000. This all will be added minus bank overdraft, which is 80,000. Now you have to do the calculation. 4 lakh plus 3 lakh, 7 lakh, 8 lakh, 10 lakh minus 4 lakh 40,000 is 5 lakh 60,000, and 2 lakh plus 1 lakh plus 23 lakh 20,000. So this is what you are going to get after adding and subtracting all the items. This you are going to get. Now you have to divide this. You can reduce it to lowest term or you can divide it with the help of a calculator, and you are going to get 1.75 is to 1. 1.75, you are going to get actually 1.75, which means 1.75 by 1, which you can write as 1.75. Now by this means ratio 1.75 is to 1. Now you need to write a statement. The sums is over. Through this I have explained you how we will work on the quick ratio. If it is asked to solve, I find out what is the quick ratio. This is the way, this is the items to be taken, items to be included and items to be excluded to find out the quick ratio. This is how we will solve. The sum ends up here. Now after this sum, we need to write a statement. We need to write a statement regarding what we are getting, and this ratio, what this ratio that we are deriving, what this ratio indicates. Now since 1.75 is to 1 means here current asset or the quick assets, current asset minus stock is called quick asset. Since the quick assets are more than the liabilities, that means the position of the organization through the balance sheet, the position that is reflected through the balance sheet presents to us that the position of the organization is sound. It has more quick assets to pay off the liabilities. So the firm is in a good position, or the firm is in a sound position. So this statement you need to write after the sum gets over. That statement I am writing, just one line statement you have to add. I am rubbing. I hope you have copied the sum. Though I am providing a PDF with this video, please download the PDF so that you can get all the solved sums, of this ratio analysis chapter. With each video, we are providing individual PDF of the sums that are done in the class. The sums that are done in the class, those solved sums we are providing through a PDF. Please download the PDF so that you can see the sums that we are solving, and more illustrations we are solving over there. So after the completion of this sum, just write one statement, that is since quick firm is in a sound position to pay off the liabilities. This is the statement which you will write as a conclusion after the completion of each sum. All these I will show you through the illustration provided with the PDF. Download the PDF. So I hope you have understood today's class. In my next class I will come up with the second category of ratio analysis, that is either the activity ratio or the profitability ratio or any other kind of ratio. So this is what, through this class we have completed. This is what is all about quick ratio, and through this class we have completed the liquidity ratio part, that is the first part, the first category of ratio analysis. So thank you, goodbye.